Do you know what is the difference between a win rate and expectancy in trading? Let me break it down in this video for you. 95% of all traders are always chasing the win rate, but they don't understand the expectancy. So, win rate is pretty much simple. I think most people know it. It is how many trades did I take, how many did I win, how many did I lose, and somehow you put it through your mathematical equation, you get a percentage. My strategy has a 98% success rate, or it has a 10% success rate. Now, what is expectancy? Because this is somehow the figure that everybody misses. That whenever I speak about it on my videos or on my lives or when I'm trading, people get really baffled by it. But let me break it down for you. Now, expectancy is very simple. Expectancy is that average that you know that you can expect per trade. It is that average that you know that you are going to make over a certain period of time. You see, expectancy is based upon taking a large sample size of trades and then knowing how much you made across all of the trades. You see, many people focus on win rate. It's great. Last week, I had a 80% win rate. I had a stunning win rate. This week, my win rate is barely scraping by 50%. But what do we do? Now, my strategy has a 70, 80, 90% win rate. But win rate varies from week to week. But expectancy, on the other hand, is a little bit different because expectancy takes a lot more factors into consideration. So let me break it down. Expectancy is pretty much where you take the total amount of trades that you've taken, and then you break down how much you made across all of those trades, and then you divide that number by the total amount of trades, winners or losers. You see, with expectancy, we're not focusing on how many winners and losers we had. We are focusing on how many trades were taken, how much money was made during that sample size of trades that were taken, and what is the expectancy rate of return that we are looking for. See, that is a whole different ballgame because now we're not focusing on winners and losers, but we're rather focusing on taking the trades. So let me shift your mindset. Instead of focusing on your win rate, instead of looking at how many winners and losers you have, why don't you start focusing on how much you make every single trade, and then breaking that down and understanding that if you take another 50 trades, you have an expectancy of making $80 per trade, whether it's a winner or a loser. You see, that's the difference. When I look at my statistics, I don't look at my win rate. Yes, it is one small little tick of my entire system, but it's not the fundamental and crucial part that I'm focusing on. I'm focusing on that expectancy rate. What am I expecting? If I took 50 trades and I made an average of $90 across all 50 trades, that's the average that I made. That's what I'm expecting for the next 50 trades. And that's what I'm going to expect for the next 100 trades. So I'm consistently managing my expectancy rate, because if I focus on expectancy, that rate is determined by how many trades I took. How many trades did I execute according to my plan? How many trades did I sit behind my PC and actually take? Anybody can have a high win rate. Come on. That's easy to do. But expectancy? That's a whole another number that not many people can jumper. If you guys want to learn more about this, check out my latest YouTube video. I break all of this down. I even break it down with two simple systems and explain to you the difference between why win rate is not really what you should be focusing on, but rather expectancy.